Ruben Coppel. So,
Okay.
Ruben, focusing specifically on the investment strategies of the Afores, how happy are you at Bancoppel, Afore Coppel with the diversification you can do? Do you feel limited?
Yes, very limited.
Tell me more.
As Jorge was saying, we complain, but we're actually working with regulators to figure out ways to open the investment opportunities. Today, the system is basically 50% government bonds, and I'm going to get this right, 14% corporate debt, 14% in international public markets, 8% in structured instruments like fibras and other vehicles like that, 7% in domestic stock market, public markets, and the rest is international debt. So the age of the affiliate of the worker in Afore Coppel, for example, is 36 years old. So we have 30 more years of investment. So the risk should be much bigger because they're able to take larger risks and they're able to get higher returns. Their returns in the historical returns in Mexico have been like 7-8% because it's government debt mostly. We need to be able to invest more aggressively. Now we have SERPs. By 2030, about 20% of the investment is going to be SERPs, which is international alternatives, and 10% domestic alternatives. That's going to help a lot. We do need to work harder with the regulators, and we need to work harder with financial institutions for them to provide the products that our affiliates need. We need more places to invest in. Now, as you know, with this last reform, assets are going to grow tremendously from 20% to almost 40% GDP, if the GDP grows at this rate. We need to see where we're going to invest more. We hope the government is not going to emit that much debt. And we know that corporate debt is kind of limited. I mean, it's not growing that much. So we need more alternatives to invest in. Global alternatives is a great idea. I mean, it's a great opportunity that we can do. We're limited to 20% today. That has to grow, but we also need to grow domestically in opportunities. The government needs also, well, we hope that the government gives us more opportunities to invest side by side with the government in longer term investments, which many roads need a 20-year horizon for those investments. So if we are able to tap into that, we're going to have much more opportunities and much higher returns. And well, 30 years from now, when our customers or affiliates retire, they're going to have a better retirement.
I'm the client. And how do you perceive those conversations with the regulators and the authorities here in Mexico?
It's been a good open conversations. I mean, they know that they need to change. With Hacienda, who we've talked to, they're like, yes, we are going to need to change. Let's do it slowly. Let's figure out what changes need to happen. But it's an open conversation. It's not, unfortunately, it's not urgent yet, but it is urgent like 2 years from now.
Yeah.
So if we start these conversations now, when it's urgent, we're going to have had these conversations for a while, and it's going to happen. It's not only the government and the regulations. We need to have more opportunities. I mean, there's enough leeway today to invest with higher returns, but we also need more opportunities. So the local bankers need to do a better job and bring more opportunities, and also entrepreneurs to bring more funds and global funds to come over and just do a local fund, and then we have a lot more to do.
So there is a super open possibility to improve the regulatory market here in Mexico. That's the conclusion.
Yes, I mean, there's a lot of money to be invested, and the risk, we can take much more risks
And for example,
in the 30-year horizon.
Okay, and you said fibras. You only invest 8%. Why?
Opportunities?
Yeah, well,
That's the average of the industry.
The average, yes.
But there aren't that many more fibras, and they're not. You're going to tell me a lot about this.
Exactly.
But very happy to have this conversation here. But there aren't that many fibras coming up, and with bigger tickets.
Very nice.
And I'll be very clear on this. The regulation is very well made. So well that in the last 30 years of the system, almost, there hasn't been any big issues on all the investment the Afores has made. It's been very solid, but you need like this much paperwork to do an investment. That's like you need it. You can't do a first time fund. You need to have them have experience. You need to have a construction permit. You need to have every single piece of paper you can imagine. So it's also challenging for new entrepreneurs or new fund managers to access Afore money. Also, we need to do very big tickets. That's also a problem. We don't have the margins aren't big enough to have huge teams to be able to invest small tickets as an Afore.
Okay, thank you very much, Ruben. And now I'm going to talk with Luis Gutierrez, chairman of Prologis. As I said earlier, this is the hottest fibra in Mexico right now because they recently acquired another fibra, Terrafina, a one-of-a-kind negotiation right now in the Mexican market. So, Luis, what can you tell us about the Prologis plans after this great acquisition?
So, gracias. So thank you for the mention about Fibra Prologis being the hottest fibra. But I want to say that we went public in 1994. We are in the 10th anniversary, and the pension fund system has been the blood of our history, right? So today, in Fibra Prologis, 37% is owned by the pension system. Mainly, almost all of the Afores have participation, and it's increasing, right? So it's been great. I believe the market cap of all the Fibra is about 25 billion, and maybe 50% of that is owned by the Afores. So about $12 billion. So it's an industry that is growing. So one of the questions that we were speaking was about why Mexico and why our sector, no? And why could this be a good opportunity? And we have been discussing this, yesterday. And so why Mexico? I think that a cycle of that started in 2001 and lasted 20 years is ending, which was mainly all about China, low labor cost, and about efficiencies. The cycle is beginning, and this cycle could be another 20 years, and this is more about resiliency and more about less globalization, more regionalization. In this context, there are certain events that made it change. The pandemic was one of them. The geopolitical issues was another one. The labor is completely changing is another one. And this is making companies redefine their manufacturing. So there are many long-term decisions on how to relocate manufacturing, and Mexico is one of the winners. Of course, we're one of the winners because we've been working at it the last 20 years. The amount of clusters that we have built throughout the years is amazing. So this doesn't depend on Claudia Sheinbaum or anything. This is kind of a cycle that is just beginning. And this is why it's so exciting. So I see demand has tripled in our sector. Our occupancy, which is about 8 million square meters, is about 99%. And rents have been increasing, and the fundamentals are going to be there for quite a while. So auto, all the clean technologies that go with that, electronics, and this has to do with semiconductors, pharma, are all strategic sectors which have to do with national security with our U.S. and Canadian partners. So this is just beginning, and this is why our sector is so interesting. So, so working with the Afores, I think, has been a great partnership, and we look forward at continuing to do more things. So.
What is your take on nearshoring for the next 5 to 10 years?
We can take advantage of nearshoring like this, or we can take advantage of nearshoring like this, right? So it's our decision as a country to take advantage of it. We have. I think the companies are going to come. I mean, the market is there, and as I said, it doesn't depend on who's going to be the next president, or in the U.S. or Mexico, because the labor shortages are there, the relocation from Asia is there, so this is a natural process that will happen. If we fix the energy problems, if we fix the infrastructure issues, if we fix the rule of law, then we'll take a big advantage. If we don't do that, it's going to be small. But the trend is coming.
And don't you think that's a risk for Prologis if the investment does not come at the end? If those kind of issues are not resolved?
I think our business plan could be larger or smaller, right? I mean, we grow organically, and we could be probably growing twice as much as we grow if we have solved the infrastructure or energy. But the business plan will be there and will be solid. It would just be smaller or larger, depending on if we find land, if we find the solutions to our issues, right?
Ruben?
You were asking earlier why only 8% in fibras. Fibras is a lot of it is industrial, of course, but we're limited to the supply side. I mean, if they can't build parks faster or plants faster, then they're not asking for more. So we're also limited by the size, and growing more means growing 10 or 20% the installed capacity in Mexico. So it's huge. I mean, it's a big growth. It's a big ask, and there are challenges, as you say.
They're challenging. So this transaction that we just did, we have now 8.5 million square meters. Our market cap is about 5.5 billion, and our liquidity, which is one of the things that is increasing at $10 million a day. So what this means is now the big Afores can have large chunks. If you want to invest $100 million, I mean, you can get out of that position in 10 days or something. Now, before, our liquidity was $1 billion, so we were not able to attract the big investors. And this is not only local, but all the global investors. So I think this is, the trend, a good trend of, something that will come.
Thank you very much, Luis. And now this helps me to introduce our next guests, Jordi, Tasias, and Manuel Perez. I want to combine this question for you, as being both international firms present here today. Jordi, where is the goal for the Afores today? Or the pension funds?
No, I think this would be maybe a question for Ruben, because the Afores. But look, the way we see the Afores from the outside, because what we are is a Canadian Afore at the end of the day. We represent the same kind of capital, we have the same objectives, and we've been through exactly the same challenges over time. The big difference is that we were created like 30 years before in Canada compared to here. But these discussions around allocation, for example, in alternatives. Now, today, we are 1/3 of our assets under management are alternatives. Here, I think the discussion is moving, beyond the 20%. So it's the same journey, right? And it's driven by what? By the size. At the end of the day, and the need for returns. So you need to do more diversification. You need to have higher returns and other places to allocate your money. Also, in the internationalization is exactly the same parallelism. For us, today, close to 80% of our assets are invested outside Canada. Like in 2017, it was 55%. And this is increasing all the time as size, growth. And what we see is exactly the same. They're having the same discussions that we had at that moment in Canada. I hear Ruben, for us, it's been also a journey, how you become agile to make sure that your capital is well invested and preserved, right? But at the same time, it doesn't represent a lot of obstacles to deploy, right? So same thing, for us. So I see a lot of parallelisms in the but maybe one of the big differences, and maybe there's the goal, is the system in Mexico will double in the next. I don't think it's in the next 5-7 years, and that's mean if it's 300 billion, it will be 600 billion. That's a lot of money, a lot of gold. In Canada, in Quebec, we're not growing in terms of new resources. We're growing because of returns, because of demographics, right? So I think that's a big opportunity to keep, working on these directions, and combine the needs of, let's say, the country, in a very good combination with the needs of the returns of the people of the country, right? For example, it's interesting to say we have a dual mandate in CDPQ. Our mandate is returns, and then Quebec. We need to invest in Quebec, in the province of Quebec, is as a mandate. Today, in the province of Quebec, all our assets are around $350 billion. In Quebec, we have like 80 billion, which is a significant portion of the assets. And our objective is to be 100 billion, right? So, and it's a dual mandate. So we need to invest in Quebec to develop the region and as a mandate. And actually, we're very in contact here in Mexico with Quebec companies to make sure that, we're around, we try to help and all these kind of things. So I think there's a lot of parallelisms, a big opportunity because of the, doubling the size, and also the normal challenges, all these investment animals will need to go through to make sure that we deliver our ultimate goal, which is giving pensions, good pensions for the workers.
Great, that's amazing. So infrastructure is like the keyword to invest in Mexico, for example, Manuel?
Yeah, absolutely. I think it's very interesting. So if you look at the construction industry in Mexico, in the last year, I think over 50% of the spending was in infrastructure. I know we've talked about industrial and real estate and other spends, but I think infrastructure, and specifically infrastructure funds, should really look at Mexico and investing in infrastructure in Mexico. And I couldn't help but bring shed some light on this panel on the pension fund system in the United States and in Chicago in particular. As a former appointed official for the city of Chicago, we've got a pension fund system that's one of the worst funded in the United States. And I know that that's not something to be proud of, but I think there are a lot of lessons that can be learned from that here in Mexico. A lot of those pensions didn't receive enough contributions from the government, but then also made some pretty bad investments that didn't result in growth. And some of the growth that we're talking about here that we're going to see over the next couple of years. And so what does that mean for Mexico? What does that mean for us? Why am I telling you about unfunded pensions and the need to grow pensions in the U.S.? We know that the U.S. has a $35 trillion pension fund industry. It's the largest in the world. But it also has a $1 trillion underfunded status. And I mentioned Chicago. So that means we've got a lot of ground to make up. We've got to find alpha. There's simply not enough deals in the United States for those types of returns. So we have to go to Mexico. We have to go to Canada. We have to look at alternatives. And as we've seen, pension funds are looking more and more towards alternatives. And in particular, we're talking pension, public equity, private equity, We're looking at infrastructure, at real estate. And so, as I mentioned, infrastructure is one of those key funds that we really should be targeting. And for the folks in the room, like I said, we've got a lot of ground to make up in the U.S. pension fund system. And so they're going to need diversity, they're going to need projects, they're going to need big projects to invest in and get those returns.
And what else? How can Mexico improve that for you guys as being international funds?
Well, so for us, we are, Cabrera Capital is headquartered in Chicago. We are the largest Mexican-American owned investment bank in the United States. We're one of the largest Latino banks. And, when pension funds come to us, a lot of these pension funds are our clients. They're looking for alpha. They're looking for growth. They're looking for opportunities in pipeline. They want access to Mexico. They want access to Canada. They want access to North America. And we've talked, this whole conference is really focused on nearshoring and on the opportunities in North American region. So really, it's about providing those links and serving, for us in particular, serving as a link to those pension funds in the United States that are looking to grow their capital.
Okay, thank you very much. Now, before going into the Q&A with the audience over here, I want to close with a question for all of you. Where should the Mexican pension and retirement system should be in the next 30 years, if that's the right window of time? Jordi?
I think continue to keep growing on the direction they're doing, which is, again, capitalizing on the size they're going to have, and continue to work with the institutions, government, to make sure that the investment regimes are adapted to that, and hopefully, together with other initiatives to contribute to keep developing the local markets. Right? I think these are maybe the three aspects that are happening, and maybe with this large size, we'll need to accelerate. But that's what I would say.
Well, the pension fund is the blood of our system, and they should be funding most of our infrastructure going forward. So I think the opportunity is really very, very important, because we do need a lot of infrastructure to take it to the next level. I think more near term, at least what I am seeing with all of our clients, is the need for energy, but the need for clean energy. And I think we'll find a solution. We're going to be creative and innovative. And the issue that we don't have electricity right now is just making a lot of people think. So I believe that this there's going to be a lot of good, right solutions that will solve our problems, and this will be a great opportunity for pension funds.
So 30 years from now, I think I want, how do I say this? 30 years from now, I hope the workers today are retiring with what they thought they were going to retire with. I don't like the word pension fund. I think we even need to change it and put it to retirement fund, because it's not a pension, it's a retirement, and you're going to get out whatever you put in. So that education or culture that we need to give our customers or affiliates is very important. They are going to get out exactly what they put in, plus, of course, great returns. But that's the most important thing today. For us to start working today, to create that consciousness of working formally, save, getting 15% of their paycheck into their pension fund today, the retirement fund, again, it's going to be very important for the future. And they're going to be able to retire with something that is aligned with their expectations. To me, that's a very important thing. And the other is, I think opportunities will arise. We need to work with our, of course, government and institutions and companies to create those opportunities. So I think everything should even out if we start working today with a 30-year vision.
Agree on that. Thank you very much, Manuel.
Yeah, I agree with Ruben. I really like the fact that you brought it back to what this is all about. We can talk about trends and statistics, but at the end of the day, is people and making sure that they have a quality of life when it's all said and done when they retire. I think diversification is important. We've had other panelists talk about the 20%. I think we have to work closely with government to continue to diversify those investments because that's what's going to lead to growth. Making sure that also, the climate here for investment continues to thrive. I know Citi made a recent strategic investment in Cicada to allow for institutional investors to buy these Mexican government bonds. And I think those types of initiatives in making sure that Mexico is more accessible to institutional investors is important. And I think, the good problem that I think we're going to see over the next 30 years is that these funds are going to grow. And that means that we're going to have to look at bigger projects. It takes as much time to look at a $5 million deal as it could for a $500 million deal. And you have funds like CalPERS that has $450 billion under management. They're not making small investments, they're making large investments. And I think in particular, when we talk about infrastructure, that's where some of the larger investments are going to be. So thinking about how we maximize those investments.
Jorge, I know you are already having breakfast, but I also want your take on this.
Thank you very much for the opportunity. What I would like to add is in the same sense as Ruben. I've been working all my life to help Mexicans to have a great retirement or a great pension or whatever other different tools he might have or she might have to build a silver economy. We have to understand that 25% of our market, internal market in Mexico in the next 30 years is going to be 60s or 65-year-old persons. If we don't worry today for them to have money, whatever our businesses are, 25% of that GDP is going to be depressed. So what do I like to see in the next 30 years? I would love to see a strong pension system that not only accumulates, but has synergies among the different 3,000 different pension funds in Mexico. The military, the government workers, independent workers, informal workers, Fondo del Bienestar, but they should all be connected. Infonavit, we have a very strong housing system, which is part of the Social Security. But nobody understands is that your house is part of your retirement security. So next 30 years, I hope everybody, regardless of their formal education, understands what they should be doing and what they are entitled to for a better retirement in Mexico. That should be what I think.
Thank you, Jorge. Applause. Now we have not so many questions for the audience. You can make one in the WUBA app if you like, but we have only one. Maybe we already answered it, but I will tell it anyway. It says, considering the growth of startups in North America and the opportunities for cross-border funding, how can factoring play a key role in enhancing liquidity for these expanding companies, especially in the context of the alignment between North American capital markets and investment strategies? Who wants to answer this one?
Well, I think in general, we need to make sure that really we benefit from this North American thing because it's a reality. You go anywhere in the US, in Canada, or here you see, and it's coming stronger. How to maximize the capital flows? I think, from us, we have invested in Mexico $7 billion today, and our objective is growing. Now, we need to see the conditions, we need to see the transactions, we need to see the size, we need to see a lot of things. So I think dialogue in these different ecosystems, in different asset classes, with different investors is what we need to do. Being in touch. Actually, we have partnerships already with the Afores locally. And so I would encourage to make sure that we're present in these ecosystems to make sure that we can have the chance to really deploy and canalize the money.
And I think funds they travel more. They're international. They know what's going on each country. Retirement funds are really local. I'm very attached, but funds can bring all that knowledge and all that information. I think those are the ones that travel more.
Let me add one more thing, just from a U.S. context. We were talking about the region. We're talking about the U.S., Mexico. Our firm has been very adamant about pushing for diversification, and not just in the investment sense, but also in the demographic sense of the folks that are managing the funds of these pension funds in the U.S. Because a lot of the contributors to the U.S. pension fund system are Latinos, are Mexicanos, are minorities, and so pushing that diversification within the United States and having more firms, diverse firms, manage funds, invest funds, serve as investment banks on those transactions, I think is going to lead to a broader understanding and a broader thinking that, you know, we can go outside of the U.S. and we can invest more in Mexico, we can invest more in Canada and elsewhere.
Thank you. I have another one from the audience. Thank you so much. It says, as the director of the Investment Promotion Agency of Guatemala, is Central America considered in your portfolio strategy?
For us, our exposure in emerging markets is still relatively small. But we have, in Latin America, we have invested around, I think it's $18 billion. And we primarily focus on Mexico, Brazil, Colombia, Chile. But this doesn't mean that we cannot invest in other jurisdictions when the transaction or the situation fits our strategy, and we can invest, fixed income, infrastructure, different ways. So its geography is less obvious for us because they're smaller, but we have in our mandate it's included.
Thank you very much. I think that's it for today.